Hello, I'm Tim Bailey with Red Day Technology, and here moderating a panel today. We're going to talk about cross-border trade and blockchain technology, and we have three distinguished panelists with us today to discuss this subject. And I'm going to ask each of them to introduce themselves. Let me start with you, Yifan.
Hi, my name is Yifan He, and I'm the CEO of Red Day Technology. So Tim is my colleague. So I'm very glad to join this panel with Roy from EY and also Scott from the law firms. Okay.
Roy, over to you.
All right, thank you, Yifan. Thank you, Tim. Roy from EY. So I'm in charge of emerging technology innovation, especially in the blockchain field. And really enjoy and glad to have this opportunity to talk to you guys. Hopefully I can contribute and discuss the topic around global trade. Thank you.
And last but not least, that's you, Scott.
Thanks. So, hi, my name is Scott Teal. I'm a partner at DLA Piper, global law firm based here in Hong Kong. I head up the technology practice for the region. Includes a wide range of disruptive technologies, and my particular focus includes blockchain distributed ledger technologies. I also wear another hat at the firm. I'm the founder of Toko, which is a blockchain based solution for digital asset creation and management.
Great. Thanks all of you for joining us today. So let's get right into it, right? International trade is under tremendous pressure, over the last 18 to 24 months. With the global pandemic, it sparked fears that have resulted in, increasingly stringent border controls and ultimately escalating trade costs. So all parties involved, including manufacturers, trading companies, transportation companies, and banks, are looking for ways to, mitigate the challenging situation. So really a question, and I'll start with Roy on the question here. Do you think blockchain technology is a potential solution to some of the cross-border trade issues we're seeing today?
The answer will be yes or no. So it depends on which type of challenges we are facing. So from the megatrend perspective, we know currently, we are facing the beyond globalization bigger trend, and most of the challenges so far we are facing, say COVID-19 pandemic, or even the beyond globalization issues, is far beyond technology can solve. Say, for example, for telecommunication companies, say different countries have different roaming system, and then eliminate all the roaming reconciliation. Blockchain will be a much more simple and smooth solution. However, it is very hard to deliver, and we see lots of telcos try to do that because the technology is only one layer of the challenges. So how the ecosystem partner can collaborate together will be the bigger part of challenges. But again, from the other side, it will be yes for blockchain to resolve global trade related issues. Say, for example, global trade is one of the typical scenarios. We see multiple parties participate. Say, for example, from logistics, we see the local international warehouse, port agent, and also we see the custom clearance agents. So it's lots of logistic participants. Also from the trade area, we have like the buyer and the seller, and they are the key component as well. Also from the finance participant, we see the banks, insurance companies, and the loan and the taxes and tax rebates. They're all key components. And the most unique for global trade is we have regulators as well. Here in China, we have the customs, we have the port regulators, and the taxation, and even the foreign exchange regulators. So they all participate together. And we know the cost of communication is very high. Through the trust between multiple stakeholders. And for example, for global trade, we know there are typical scenarios for multiple participant in this global trade scenarios. For example, from logistic, trade, finance, and regulator perspective, we see many players in the field. From logistic, we have warehouse, we have port agent, also we have the logistic companies, the customer clearance companies. And from the trade area, we have the buyer, the seller, and the cross-border buyer, e-commerce, MNC, and trading companies. So they're all from the trade perspective. And also from finance background, finance perspective, we have the bank, insurance company, and the tax rebate related business and participant. And especially for regulators, we have like custom regulators, the port, and also the taxation and FX control. So all these key participant in this scenario, we know the cost of communication is very high. The cost of compliance is super high, and the cost of trust is very high. Using blockchain technology as the fundamental tax solution can improve the efficiency of the communication and enhance the trust. That's why from the tax perspective, we know definitely will be a good breakthrough to improve the efficiency overall.
Yifan, what do you think? We talked about the difficulties of cross-border trade right now. How do you see blockchain technology helping that or not?
First, I totally agree with Roy. Okay. First, the trade need to happen first because the technology is the least our concern. For example, no technology can make North Korean and American start trading. Okay. No technology. So it's first they need to have the trading relationship. I think that's the most important. And second one is, they have their business requirements. For example, for trading with US, they have different policies, right? Different taxation to different countries. So that definition, that kind of rule, that kind of regulation is the second. Then what technology can do is just increase the efficiency a little bit, okay, or drop the cost a little bit. That's what technology can do. So right now, the shipping problem, because the pandemic, the shipping actually stopped in some country. So that technology won't solve that because, it's because of policy layer. So, but I totally agree. When the trading relationship is there, all the rules there, and blockchain technology definitely can increase the efficiency among the communication of all parties. That's what blockchain technology actually good at. So under the global trade, especially the cross-border trade, involves so many parties and the stakeholders, like Roy just said. Okay, almost all the business, all the government agencies involved. So that cause actually the information process becomes so complicated. And this kind of, I think probably, for example, a cross-border payment right now it probably takes 3 days. So in average, and the cost also is very high. It's like 9%, 8% of the money world. So blockchain technology definitely can drop that cost and increase the efficiency. That's for sure. So that's why, but I still think for the global trade, the technology is the least of our concern. So.
Okay, good. Scott, let me turn to you. You mentioned in your introduction that you're the founder of Toko there at DLA Piper. Maybe you can tell us a little bit more about why a large global law firm would come up with an asset tokenization platform.
Sure. Thanks, Tim. And it's a question I do get asked because it's perhaps a little left field for a law firm to do this, but I think as we move towards the digitization of more complex assets, and what we're talking about here with trade finance products and associated financial instruments that can be used within these ecosystems once the blockchain solutions are adopted. These are complex instruments. They are One of the biggest, I agree with Ifan in a way, the tech is the least of our problems. As we start moving into, well, now we've got all this information, we've got all these assets moving around, and they're being tracked and monitored by distributed ledgers, and everyone's able to trust each other through the use of that technology. Now, what can we do with it? Well, then you get into, well, if we start representing these interests in tokenized form, what are they? What are they in Hong Kong where I sit? They could be a security, or they could be a collective investment scheme, or they might be an unregulated token. Suddenly it goes across a border. What is it in that country? Who's allowed to buy that? So actually the legal and compliance challenge is enormous. And that's from the perspective of, just what is the asset and who's allowed to trade it, who's allowed to buy it. And then there are other issues around the way in which these digital sort of interest financial products need to be managed. So there are confidentiality concerns. What information sits on public chain layers visible by the whole world? What needs to be put into private chain environments so that it's kept secret except for those who are allowed to see it, for example? What happens with privacy regulation as these things move around, and immutable blockchains versus right to be forgotten? So actually there's a huge number of complex legal and regulatory challenges associated with the implementation of this technology. And the conclusion I came to after kicking the tires on a few tokenization technology companies was they didn't have an eye on perhaps these more complex assets. And there's been obviously a lot of focus on cryptocurrencies and unregulated NFTs, particularly this year. But actually, there's more complicated asset class. They haven't really been, many of the pure tech companies haven't been thinking about that in the same way a law firm would. We obviously live and breathe these issues. It's kind of our bread and butter as a global legal advisory business. And the conclusion I came to was, well, it's a lot easier for us now to build a compliance-orientated tokenization platform than it is for a tech company to build a global law firm. And so that was kind of the origins of this. And really, we've built the Toko solution with that kind of compliance piece very much in mind.
So what, Scott, can you talk a little bit more, like what type of assets are you guys looking to tokenize? What's the business?
It's a great question, and in a way, we had views on what the market might want, and then when we launched Toko, the market then came and told us what it wanted, and there was definitely a little bit of a gap between those two expectations. So we've had an awful lot of minerals and natural resources type projects that have been looking for ways of tokenizing interest in perhaps minerals or other kind of assets that are yet to be mined, for example, and sort of future entitlements to what may come out of the ground in due course. So we've had projects like that. There have been some perhaps more what people are hearing more commonly around real estate tokenization, the fractionalization of real estate through token fractional interests to allow smaller bite sizes so that people can participate in asset classes. Again, Hong Kong's the most expensive real estate market on the planet, and once you start looking at commercial buildings, not everyone can afford one of them, obviously. So ways and means of actually creating new financial instruments around real estate and having more investors being able to participate in an asset class that they want to get involved in but haven't been able to because there was no way of buying just a smaller piece of it. So there are a couple of examples, and we're working on a number of projects, but then there have been a whole range of other things. We've done physical art, we've done digital art, digital collectibles, combinations of physical and digital. In fact, the very first piece we did at Hong Kong Blockchain Week just over 12 months ago now was a fractional NFT with multiple owners of a physical work of art with a share of the economic interest of the asset, for example. That was about 2 to 3 months before the NFT market went crazy and everyone suddenly knew what an NFT was. So that was quite interesting as a test case. But there really is a very broad range of assets, funds, all forms of financial instruments. We're seeing a lot of interest around, green bonds, ESG orientated type investment. There's a lot of finance looking for, green financing homes to fulfill certain requirements around green financing quotas. So quite a broad range of assets at this point. And I'd say we're still at the uptick stage of this. It's just really starting to gather momentum. And the number of inquiries and meetings we're having around this every day is very much going up.
Thanks, Scott. Roy, do you have any other examples that you've seen of blockchain applications in cross-border trade scenarios that you're working on?
Yeah, definitely. So I gave a few examples here in China. So, for example, the GACC, the General Administration of China Custom, they do a very innovative blockchain solution in Tianjin port. So basically, the project is based on the parallel import cars. So using blockchain to improve the efficiency of the parallel import cars efficiency. Apparently, what happens is, normally when you import a product to Tianjin port, you need more than 15 different documentation and attachment. Also, you need to report this similar documentation multiple times. Say, for example, when the product reach to the port, and when they unpacked and enter into the bonded warehouse. So normally the procedure is very repetitive. And building a blockchain and connect multiple layers, including logistic companies, regulators, and the trade companies, and even the bank, can improve the efficiency, and people can obtain directly from the blockchain platform other than manually the trade company submit the document themselves. So by doing that, it hugely reduces the human operations, avoid the errors caused by the deliveries, and improve the efficiency for the entire business. So the most important part is the regulator have two roles for the custom scenarios. Number one, they are the regulators. Number two, they are the service providers. They need to help the business to clear their product in this process effectively. And as a trade company, normally you need to prove yourself. My documentation is right. The clearance, all the information is accurate. But by adding multiple layer participant on the node, so now some of the information you don't have to prove yourself. Third-party information on the blockchain can prove for you. Say, for example, the logistic company, the warehouse company, and the LC from the bank. So they can also, from the other angle, to prove your information is more trustworthy. So overall, connecting all the participants on one single platform can improve the efficiency, significantly. So that's a good example. Also, EY, here at EY, we're also doing some global trade related project. 1 year ago, we've been working with Shanghai Custom and building a custom and bonded warehouse civilian blockchain project, helping the goods improve the trust issues, efficiency issues, and security issues for the bonded warehouse at Shanghai Custom. So I won't give too much detail for the EY case because it's very similar to the Tianjin GACC case as well. So overall, the key component is, as long as you can bundle most of the key stakeholders on the blockchain and the global trade related clearance scenario, you can see lots of efficiency improvement.
Yifan, what about you? Have you seen any recent examples on BSN in trade scenarios?
Actually, we do some cross-border trading, technology. But today, I don't want to talk, too much about the BSN. I want to give example. Basically, it's when we talk about the cross-border and plus blockchain. Actually, there's one project I want to mention. It's not BSN. Okay, it's actually Trade Trust from Singapore. Okay, so it's an open source project, Trade Trust. Okay, so everybody can check that out. It's actually what I do is this project actually originally developed by the government of Singapore, the GovTech, and managed by MDA. So what I do, actually, they create a standard. So when people transfer documentation, it could be letter of credit, it could be, letter of lending, bill of lending, it could be any documents, PDF files, or even data sets. Okay. Then when you transfer that to another country or another party, you can actually encrypt that and create an NFT on a public chain. Right now, it's Ethereum. Then you can this ownership of the data set or document can be transferred. There's ownership, there's holdership. Then that's how you really manage any data transfer cross-border to comply with all the rules locally. So then you can actually trace who owned that document and who holds that right now. So it's actually pretty simple, but very neat standard. So right now it's Ready is also an open source contributor to that project, and we also implement it in China, in Chongqing government, and also the Shenzhen government. They are using that kind of technology. But what the point I want to raise is still not technology. Singapore, actually, the IMD, they build a verification center, which means no matter, because it's open source, you can integrate that into your own IT system. But when you create that, the trade trust document, you can actually go to the Singapore official website, trade trust website, to verify that. So what Singapore government really want is you can use this technology, but when you verify the ownership of document, come to us. Okay, come to Singapore official website and do it. And the problem is the Chongqing government and the Shenzhen government, they just don't want to go to a foreign country, the government's website to verify their encrypted documents. So this is what I mean. It's very neat technology. It makes sense. It really give people trace all the documents and also verify the ownership. But just because it's two countries, they have different regulations, different perspectives. So they just don't want to. They can use the technology, but they just don't want to go to another country to verify that. So how to solve that problem? So that's why even we are working with three sides, try to build something can be recognized by everybody. So this kind of thing is actually the problem for global trade. It's not technology, it's the willingness to work together, use same standard, use other countries' technology. So this is actually the biggest problem in the technology field of the cross-border trade. We have technology to even make everything much simple, but due to political reason, different countries' reason, they just don't want to do it. So this is the point I want to raise.
So Yifan, you're saying that the interoperability issue is less of a technical issue and more of a political issue.
Yes.
Okay.
Always, between the relationship of different country, even different company inside one country, different company. Google never used some technology from Microsoft. So it's just the Tencent in China never used technology from Ali. So this kind of relationship actually is a problem for all the technology, because people don't pick the best technology. They actually pick best, commercial interest. So
maybe I just jump in on that that point around the interoperability. And I think Yifan makes a good point about the way that traditional tech doesn't play together, and perhaps nation states aren't very good at playing together. I think one of the really interesting things about blockchain technology is the potential for collaboration, co-opetition, to actually bring together global solutions that are capable of really creating globally efficient systems. Now, whether governments and regulators will allow that, whether the blockchain protocols and app builders on those systems really do actually collaborate, medium to long term, is yet to be seen. But from my perspective, and I agree with Ifan's observations about the traditional tech players, both in the West and in China. So far, I would say there is greater level of collaboration. Even at the sort of base layer, the sort of layer one protocol level, we're starting to see interoperable systems that allow digital assets deployed on one protocol to be moved across through bridges or atomic swaps, so that they can play with solutions on other systems. So I'm hopeful that we're going to see a greater level of collaboration and interoperability amongst the different technology platforms than we've perhaps historically seen, and that in a way I think is supported by the very almost the kind of philosophy of and the sort of origins of blockchain. The sort of cypherpunk kind of it's for all of us, not for just those who control it. It's almost got an anti-central kind of vibe around the origins of this, and that manifests itself today in the way that most of these protocols are fully open source. Everyone can see the code. Public blockchains are visible to everyone, so activities that are happening on these networks are visible to everyone. So I am hopeful that we're going to see a greater level of interoperability with DLT technology than perhaps we've seen with traditional tech.
So let's kind of move into the regulatory space a bit. So in cross-border trade, you've got stakeholders from various jurisdictions involved in those trade relationships. In the meantime, the businesses who are involved in that have to look out for both their own local data laws, but also international data laws in those cross-border transactions. Yifan, do you see a role that blockchain can play in kind of the ensuring that we comply with the various data regulations?
Yes, actually we also work on some project on that. But first, let me also use the trade trust scenario to make the point. For example, why they cannot talk to each other, and the Chinese government doesn't really want to do that because all their NFTs is create on permission chain, and the trade trust in the Singapore actually supports Ethereum. I mean, and the Singapore government try to convince the Chinese government to create NFT on public chain, but it's against the Chinese regulation. So then that's actually, we need to build something to bridge the permission and the public chain. So make them NFT can smoothly move and to be verified eventually, because the foreign partner, there's a cross-border trading partner outside. They probably don't even want to connect to a permission chain. They just want to connect to the public chains. So that actually makes the interoperability a must-have technology. Otherwise, they just don't talk to each other. So that's why how to build that kind of interoperability, like Scott just said, it's will definitely based on the distributed blockchain technology or ledger technology. But also right now, 2 months ago, China just published its own data laws. So one thing, it's by regulation. If you are a website. If you are a website and you have more than 1 million personal data registration, then when your data go out of China, you need some kind of regulation to a regulator to report to. So right now, the best solution to implement this regulation is actually based on the blockchain technology, because it basically need to go through a blockchain to record what you send out of China. So because regulator cannot check all the data on the fly, right? They need so which means there's a big gateway. The concept is the China will build a big gateway based on the blockchain technology. So when your website connect to websites outside and sending personal data, the government need to have a record when you did that, and who you send to, and how big the data is. Even it's encrypted, they have a track. So right now, because it's just beginning, but what I see some designs is totally based on blockchain technology. So that means, the blockchain technology is the only technology you can use to do this kind of data law, to comply with the data law. Because remember, if you don't have blockchain, each website is connecting 50 different websites outside China. How can you even trace that? It's technically impossible. So that's basically it's what we see in China right now.
Roy, what do you see, and what do you see the implications of the recent Chinese data privacy laws? I think you're doing a lot of work in China as well.
Yeah, that's right. Basically, we see as data will be the most precious and critical asset for the digital economy, and China start joining the global standard to publish their own data privacy and data security law. Starting from GDPR, US we have CCPA, and even Australia, and we see globally we see many data privacy and data security related laws. And also, we know, the listing company Didi, they've been investigated and now they might be released in Hong Kong. Also, data sovereignty will be a critical issue. And this is the topic you can't, if you can't solve properly, and you have lots of problems. So I'm pretty sure Michael will be the expert in this field, but the typical, for the industry solution, we believe the only compliance way is, you keep the data physically in the judicial countries. Say if the China data, you definitely need to keep it in China. Singapore data, you need to keep it in Singapore. So what blockchain technology can do is, here in China, what we call blockchain can help the country or entities exchange the value of the data without sharing the data itself. Just, you sharing the value of the data without sharing the data itself, which means you keep the data yourself and you only sharing maybe the features and the functionality of the data to interact with your trade partners in order to achieve that. And then you compliance for both, local and global data laws. So what we believe that might be the best, secure, and the most straightforward compliance way to solve these issues. Yeah.
Well, as the lawyer on the panel, Scott, you probably have something to say about laws and compliance.
I do. It's an interesting question that I like to start with. We run a huge data team, here in Asia and globally. And one of the things I always like to think about when we advise our clients is why are these data laws in place in different countries? And the motivation and rationale for the domestic implementation of data laws, while there are common themes to the way data laws always look, it tends to regulate the collection, use, storage, transfer, localization. Those are always the same moving pieces to any data regulation. But the way it manifests itself, I think, typically underpins a motivation that is quite different country by country. So, in the European context, where they genuinely think personal data is a fundamental human right, then I think it's a true belief that is the perspective. And so the way that the laws pan out there really play to that belief. But if you look at other jurisdictions, I don't think personal privacy has anything to do with the weaponization of data laws. And I use that phrase, weaponization, quite deliberately, because I think there is, the sort of macroeconomic and global trade tensions that exist between nation states. Data laws are being used as tools to achieve broader objectives, and those objectives could be, access to information, the build-up of intellectual capital and the retention of intellectual capital within nation states, the promotion of domestic industries and job creation, the need for IT infrastructure and the associated jobs to stay in certain countries. The effectively kind of forms of tariffs or other sort of sanctions type activities that can go behind it, information flow, internet sovereignty. I think all of these are potentially factors that really underpin the different ways in which these laws are rolled out on a country by country basis. Now that makes an already complex job of how do I deal with a global decentralized ledger blockchain solution when all the laws are different. But actually, I think even more importantly, that those laws that are going to rear themselves up and suddenly create a problem for you really depend on the cultural or other incentives behind those laws, and that's where it can get really quite complex. So I don't think of blockchain as necessarily being the solution. I mean, it's interesting, Roy's perspective, which is probably, I've got a real focus on China and the new law in China, where keeping a copy of the data in China is really, I think, the key objective. The regulators are wanting to say, in China, if there's any information, I want to be able to get it, and therefore I want it stored locally. Actually, that's quite unique to China, that rule. If you look at most countries, what I actually say is don't send it anywhere else. Unless you are protecting it, i.e. that country it's being sent to is safe, or you put in place safeguards to ensure that when it does go over there that it stays safe. China is very much just make sure there's a copy. I don't actually really care if it goes anywhere else as long as there's a copy here. So actually the blockchain solution, a decentralized ledger, as long as we've got a node or a mirror node in China, job done. But actually that solution isn't necessarily going to work for another country where they're saying, no, our rule is keep it here. And so just keeping a copy here is very much a different thing. So this is where I think it's quite a complex issue. Now, again, I referenced Toko earlier and some of the sort of data compliance things in there. We thought long and hard about these issues in the way we've designed that distributed ledger solution. And, we aren't using immutable proof of work blockchain technologies within Toko, because we can't have a situation where personal data is going to be put onto a blockchain and it can never be removed, because if you've got any European citizen data on there, they've got a legal right to say remove it. But I can't remove it because it's in an immutable blockchain. So we didn't use immutable blockchains within the architecture of Toko. We thought very hard about the way in which information can be stored but then removed. We've thought hard about which information goes on different stacks. So we actually do leverage public chain trust. We can use Ethereum public chain trust, for example, within Toko, as long as other ledgers, including Hedera, and Algorand and Polygon Layer 2s and others that we're working with as well. But we thought very hard about what information goes where, because if it ends up on a public blockchain, it's everywhere, and everywhere is a problem from a data law perspective. So we've really designed Toko with privacy by design, global privacy by design built into the architecture of it. And so, because I think it's just going to be quite challenging to say, well, blockchain solves the data problem. I think blockchain applications, the way they're structured, need to have regard to, the different regulations and the need to comply with them.
Very clear. Very clear. Yifan, any final thoughts from you on regulation and projects that you're working on?
Yeah, first, I totally agree with Scott. Okay, I think actually blockchain technology is a little bit against all the regulations right now, not only financial, data law, almost everything. So it's, but if they keep that way, it's a very small area they can apply the technology to. So that's why, as a BSN operator, we actually support all kinds of blockchain technology, the permission, the public open permission, just try different, technology applied to different scenario, different user cases. That's what we're trying to find, okay, a balancing point. Not everything is on public chain. It's also some is on permission chain, some on the open permission chain. Okay, it's a 3 type of chains. So that's I think eventually we can find in any country, eventually technology needed to move toward regulation, not the regulation actually needed to comply with the technology. So that's something, especially people working on public chain needed to realize and need to understand.
Well, thank you. I want to thank Scott and Roy and Yifan for the conversation today on blockchain and cross-border trade. There's certainly a lot of complex issues related to interoperability and regulation, and even the limitations that technology can have, and how the political dynamic plays an important role. So thank you all for joining today. We look forward to having you on a future show.